Okay, welcome everybody. Can I please get a confirmation that you can hear me and that you can see my screen? Just please type your comments into the chat, and once I get confirmations, we'll get going. Hope you've had a good day so far. A bit earlier than normal, our session, but yeah, schedule needed to be adjusted slightly. Okay, great. Get my first confirmation coming in here. Just waiting for a couple more, just to see that there's a consensus. Okay, great. My colleague is telling me it's looking good. Okay, so let's get going. Okay, so once again, hi everybody. Today's topic is on day trading, what it is, and how to improve your success rate while you do it. And we chose the topic of day trading because it's a word that's used a lot within sort of the trading, the retail trading community, and it's a very broad concept where a lot of things in a way fit in to what you could call a day trader. And so I want to first of all just outline what it actually is, what it involves, what key factors or elements it relies on in terms of a trading approach, and then also what things it requires so that it is as successful as possible. So if you have any questions as I go along, type them into the chat and I will address them as I go along. I will check the chat throughout the webinar. But for the moment, let's just get going with an introduction. So day trading, very, very simply, simply means it's a very short-term trading approach that a lot of retail traders actually do, even if they don't call it that way, which is basically that you open and close a position within the same day. So you open in the morning or maybe something like that, and then a few hours later, sometimes even just a few minutes later, depending on what happens. There's many different strategies that you can have in day trading, but the most fundamental principle is simply it's very short-term trading. It involves scalping. It usually scalping absolutely falls within day trading. You cannot be a scalper and not be a day trader. And so it's, like I said, for very short-term positioning, and it's also takes place, or day traders try and make use of very small price movements. So the trades, they take place within a much more narrow price range than, for example, people who have positions open for the whole week or a month or something like that. They obviously expect price to go in one direction in with a much more pips to be crossed in one direction, whereas day traders, you have a very different approach. You mostly go for a technical analysis, and you're kind of really making use of sort of small supply and demand inefficiencies in the market during the day. And so it requires quite a few things to get it right. It sounds simple on the one hand, but it's always good to remember, like I wrote down here, and I mean, a lot of people, you probably heard that before, but about 92% of day traders lose money. And I think it's because it's tempting to approach it as a way of gambling in the hopes that you're going to make money quickly and big money quickly. And because, of course, the initial idea is that, well, if I can open and close trades several times a day with a strategy, then surely I'll be making more money than if I trade longer term or medium-term trades. And on the one hand, you can say yes, the potential is there for you to obviously trade more frequently and therefore potentially earn more money. But also, of course, you couldn't lose money more quickly. But the risk in that approach is because it's short term in and out, that it becomes a sort of reactionary trading. It becomes a less, often for people, it's becomes less structured. You don't stick to certain protocols and rules, and you don't have a very clear system. And then you basically, what that means is that you're just opening trades and without following a true structure. And that means that basically you might change your approach during the same day several times, and you might get actually overwhelmed by your emotional reactions to, say, some previous trades that may have gone wrong, and then you want to make up that money still before the end of the day, and all sorts of complications can come in there where this high number of 92% comes about. So obviously the key is to try and get you to be part of the 8% who do earn money from this. And there are several things that you've got to be very clear about. So, like I said, in general, it requires great discipline. This is not to be underestimated. Great discipline in the sense of you've got to be very clear about how you're approaching it. You've got to stick to your rules and guidelines. You've got to execute them without emotional contamination of your choices. It also obviously therefore includes in a very structured approach in the sense of you must develop a system that you are comfortable with and saying, okay, I'm following the system and I follow it to the letter every single time. I'm not making exceptions. Maybe after some review you can say, okay, I'm improving or I'm refining my system by making some changes to the rules, but you can only do that after you've, so to speak, clocked, several trades, maybe 30, 40 trades, and you can then review them and see, okay, now I'm going to change my rules slightly because I get the feeling that from the previous trades there's something that can be improved. But other than that, it should always stay the same. Then you also require a background knowledge of market dynamics. So you got to, most importantly, understand the different dynamics and at different times during the day when different markets in the world open, because price will behave very differently depending if it is just the Asian session, if Europe opens, America opens, etc. And if you are unaware of when these times happen, these transition times and openings and closing of markets, then for day trading purposes you can really get burned. Your trades can suddenly go against you, even though everything was going well and you were in profit, etc. So we're going to cover that, and patience as well. And I'm going to talk about what I mean by patience as shortly now as well. So let me have a quick look at the chat to see if any questions have come up. Okay, so here we are. How to control emotion in trading, Pradeep. Yes, I will discuss that. I will keep that question for a bit later. I will come back to that. Okay, Marcos, lose more than you gain, and when you gain, it's a little bit. Yeah, it's a very common thing, and I do understand. I think pretty much everybody has to go through a phase like that, and I will respond to that as well. So, Pradeep, then the next question was, which is the best indicator for intraday trading? Now, that question I will quickly address already. There isn't such a thing as the best indicator for intraday trading because what you need is you need to find um, either a system that somebody else has already developed well, that you are really well aligned with, and follow that, or you got to create your own system by choosing certain indicators and putting different analysis tools together that work exactly for you, and then you can apply that in your intraday trading strategy. But as such, there isn't a best indicator. Um, just to clarify that. Okay. Okay, so I'm sorry why there are interruptions. Um, so I'm really sorry if there is some problems. I will close one window, and I hope that that may contribute to it. The internet connection should be fast enough in general. Okay, except now I lost the chat. So I will later on open the chat window again. But if it has to do with the memory, the RAM of my computer, then closing my browser should help. So I will later come back to more questions. So let's get going into, okay, what's required to be more successful in day trading in general. This is it's not a strategy yet, and we're just talking about generals that anybody who engages in trading, in day trading, will benefit from. So the first point here that I'm making is choose only assets that tend to move more, also within the course of a day. So assets that have high volatility, right? That in general you get pip movement, because for day trading you need something that moves. If there's something that's really slow, it's just no point, because the trade won't go anywhere in any short period of time. Most of the time you get frustrated, you just stay away from them. And in that sense, what are pairs that move fast? Well, in terms of forex, the GBP, so the pound, the British pound pairs, pretty much all of them, they move quite a lot. So they move fast. They cover a lot of pips. So from the majors, as in euro dollar, pound dollar, and US yen, the pound dollar is definitely the one who covers the most pips. But then also you can add crosses. So for example, the pound Australian dollar, the pound yen, uh, they are very fast movers too. So they are actually very good choices for day trading, right? Because you require this movement. Otherwise, and no matter what your strategy is, it's just not going to go enough anywhere. Then some euro pairs are also fast moving. So the euro USD is not bad, but then you also got like certain crosses like the euro New Zealand dollar, euro Australian dollar. These are actually quite interesting in some respects, because they also cover a lot of pips. And in terms of equities, I like to stick to the major indices, so Dow Jones, S&P 500, Nasdaq, those kinds of things, because again, you've got more liquidity, and generally, as the American market opens, you get a good movement, and so I would stick to those. You don't want anything that hasn't got liquidity, as in a sense where price gaps, right, where they're off, and that happens often in stocks um, of companies that aren't traded so much, or individual companies. Indices are better in that sense, because obviously it's an average and of many different stocks. So what you get often in individual stocks is that price just jumps suddenly from one point to the next, because there's no buyer or seller within a certain range. And for day trading, that's not good at all. because then suddenly the price might jump kind of beyond your stop loss or something, and you can't do anything about that. So very important point: choose your assets wisely. If you do forex, stick to GBP pairs and some of the euro crosses. If you want to include some equities, I would just the major indices I would stick to. Then, knowledge of market behavior during different global trading sessions. I mentioned this just now. Very, very important thing. Let me show you what I mean here. Let me go back here. Basically, obviously, the trading day starts in general with, so it's obviously when it's about midnight in Europe, the New Zealand market begins to open. This is the very first market that opens, financial market that opens. It's about 10 a.m. in New Zealand, but in Europe it's around midnight. Um, 1 second. Just let me get this. I wanted to show you a little map. I have shown that, I think, in a previous webinar as well, but it's a good little map. Okay, so here on this little map you can see all the major financial markets across the world. So you can see right now it's 1 o'clock in New York time, and it says it's open. Here in London it's 6:15 in the afternoon, and New Zealand it's 5 o'clock in the morning. So when the new trading day starts, New Zealand opens here first because it's the first one on the next tie. And you've got to understand that these markets, they're very, very small. So at the beginning of the day, you've got to work out where you are in the world and get these times right. But if you take, for example, Europe, say Greenwich Meridian, right, as GMT time as your central point, then around midnight nothing's moving because both major markets, New York and London, are closed, and these markets, they're so small you virtually get no movement at all. So for day trading, there's no point you opening positions during that time because price isn't going anywhere. The first time when price starts to move anywhere at all is when Tokyo opens. And Tokyo, if I go down here, opens at 9 o'clock local time. So at 9 o'clock Tokyo time, it opens. It's about maybe 3 in the morning GMT time. And you get the first initial movement where when enough buyers or sellers are coming in to move price. And this is actually your first time where you can start to day trade. So you have to choose which session you want to trade. And I would say you only choose either the Tokyo session, you choose either the start of the London session, or you choose the start of the New York American session, right? Because they are the three major ones, and anything between that is tricky for day trading. So because what happens here, then you get as a sequence of markets that open here in Asia throughout the day. Then, so as the time goes on, so 9 o'clock Japan opens, then a couple of hours later or 1 hour later China and Shanghai, Hong Kong open. Then at some point India, Dubai, Russia, and this whole transition period is a bit messy. The price generally goes in one direction when Tokyo opens, and then it tends to sort of range during this time. And so stick to the opening times for making trades around the opening time of the Tokyo session, of the London session, and of the New York session. However, you've got to bear in mind that you have to be clear already what you want to do more or less before the session opens. So it's not good enough to start analyzing right at the opening. You already need to have an idea of what's of interest to you, and then essentially you wait for a price to reach a certain level that you've identified, where you think that's a good level to enter, to buy or sell, and then you execute it around the opening time if price hits that level. But to start analyzing and then reacting to a price movement that starts to initiate, say for example when Tokyo opens, that's not so good, because you're one step already behind the market then, and you're probably gonna lose out that way. Let me just quickly go back to my chat to see if I can find that again, to see if everybody could follow me so far. Okay. So once again, I apologize for the bad transmission, but we have to keep on going as best we can right now, and we go on. So the training will be roughly 1 hour. So we're now 20 minutes in. Okay, so we've covered the times. Now the next point is well, like I said, you've got to do pre-analysis, as in you've got to know what pairs are of interest prior to the start of your chosen trading session, in order to be clear about what you're planning to do before the action starts. So, and that goes hand in hand with, of course, for that you need to have a system that you say, okay, I'm analyzing the chart with such and such tools, whether that's chart patterns, Fibonacci, trend lines, whatever you do, and whatever set of things. You don't have to just use one thing. You've got to work out where's a good opportunity, because just because it's called day trading doesn't mean that every day is a good day for trading. This is one very important key. Sometimes when your analysis doesn't fit into your system, you when the analysis just does not show anything really promising, then you can't just force your trade, because that will then go wrong for you. You've got to wait for the market to meet your system, so to speak. There might be other opportunities, but if it's not in line with your system, then you can't just keep on switching system, because that's when your inconsistency comes back in. So I have a set of a system that I use, and if you've heard me speaking before, then you will have probably heard that before, that I use as a core foundation Elliott waves as a main analysis tool. So I do my Elliott wave counts on the chart. At the moment, I haven't got an Elliott wave analysis showing here because I am taking a break from trading at the moment. So I would have to catch up with my Elliott wave analysis, but that would be the first step for me. Then I use moving averages as an additional tool. I use trend lines and horizontal support and resistance levels. That's my system that I've developed over time. And as you can see, I use a variety of indicators. I don't just use one. I also use oscillators down here. They give me a sense of momentum and divergence, etc. And I can use that basically in principle on any time frame. And what I can give you with you as a thing that you can then develop for yourself and add to your own system is one thing, and that's for day trading, so say you probably want to enter on generally a 15-minute time frame, or you maybe even a 5-minute time frame, but your pre-analysis has to start on a bigger time frame. So I would at least go say to the 4-hour chart, and I would begin to draw on the bigger time frames some major support and resistance zones, right? Because in the end, price will constantly bounce back and forth between support and resistance levels. If price breaks through a certain resistance level or support level, um, it of course that happens, but it will eventually only go to a point where another major resistance level comes across. So you've got to map out the support and resistance levels on the bigger time scale so that you know where there is room on the smaller time frames for you to trade in, because you never want to trade into a brick wall. And so here, for example, on this 4-hour chart, as an example, I can draw a very clear trend line between these 2 points, say roughly here. And so for me, these 2 points, and now price approaching this point, this line for the third time, this, for example, is an important resistance level for me. So in that sense, if price gets too close to this, and it is relatively close, it's probably about 40 pips away or so, it's tricky. It's starting to get tight. So at this point, I would not at all want to go into a buy position on a smaller time frame, because I hope you can follow that. So I would not want to get into a buy position here because price is coming towards, on this bigger time frame, to a major resistance trend line. You see, in addition here, that's why I use a long-term moving average, for example. This line here is also an additional resistance potential. It's a 144 moving average, and price is now at this. It might shoot a bit above it, but because these two lines are quite close together, this is becoming a more significant resistance zone. So say I would not, and if I go now to the 15-minute time frame to look at this chart here of the pound yen, you can say, okay, price is going up, and maybe I'm tempted to go in the upward direction. If there's a pullback, I would be hesitant to enter this. Maybe if you get a pullback, it's tricky because you have quite a ranging phase before that. So I wouldn't touch this right now. So this is, I think, the most important thing for any day trader is you've got to keep the bigger picture in mind. You can't ignore it. Even though you're going to enter on smaller time frames, you cannot ignore the bigger picture. So in addition to trend lines, you of course also need to draw your horizontal support and resistance levels. So you zoom out again on a bigger time frame and you try and map these points. And here, for example, this green line that I just drew, this point here from the end of May is now becoming a relevant level again. So we're now actually coming to an important a confluence of resistance. We have this trend line, we have the long-term moving average, and now most likely this horizontal support level too, because price reacted to this in the past very strongly. And maybe if I go to a bigger time frame yet, I might see that it was relevant in the past, further in the past as well. And yes, see, here we had an exact hit again. So this is, for example, how I map out these zones. So I hope you can follow this. I'm going to check on my chat to see if anybody has any questions. Yeah, Mohammed, to trade pound pairs, definitely staying with the local market is good. But of course, say if you trade the pound US dollar, then of course it moves just as much also actually in the during the American session. Okay, so King E has a question of what should you set the moving average to for day trading. In terms of moving average, obviously if you select the moving average and put it on your chart, I'll just show you this now. You can choose any time period. I, for example, like the 144, but you could say for a strong moving average, you can also use 100 or 200. And many people use the simple 100 moving average as a kind of medium turn indicator for a price average. And if you go to visualization, you can then select on which time frame it comes up. And if you select all time frames, you've got to understand then, I will click and cancel because I'll show you on the one that I mean. At the moment, for example, I'm on a daily chart, and this moving average here is the 144 moving average of the daily chart. So if I, of course, now go to the 15-minute chart, I also have a 144 moving average, but it's completely different, obviously, to the one from the daily chart, because the moving averages are always based on the amount of candles of that time frame. So the 144 moving average of the 15-minute chart takes the last 144 candles of that particular chart and creates an average price level for that. And the same applies with the daily chart. And it here applies for every candle. It takes the last 144 days and plots a chart. So in that sense, it's actually in moving averages and time frames are kind of independent of each other. So what's a good moving average to use is a short-term one and a longer-term one. So I have about the 144 period as my longer-term one, which is a stronger support or resistance when price reaches it again. And then I have the 21 EMA, which is this double band here that I've put in, as my short-term moving average, which is also a support and resistance area, but it's not as strong as a big one. So both of them become relevant to me at different times. Okay, so I think this is probably all for now in terms of questions. So we will show you, because I'm just referring now to this point here, an exact system and set of rules you're going to follow. This is an essential key for day trading. So, like I said, so far we haven't talked about an exact system and set of rules. Why? Because this is a general webinar on day trading, and within day trading you can have many strategies and they can all be good. The main problem that people have that lose money with day trading is that they do not stick to a system, to a set of rules that you've come up with yourself because you've developed various skills for analyzing and then combining them in a way that works for you, or you buy one or you join a group or something like that, like the Strike Trader Elite system, for example. There are systems that are already established and they can work as well. But the key, no matter what exact strategy you use, is that you are sticking to it for long enough. You need to stick to it at least, say, for 40 or 50 trades, so that you can then review your history and say, okay, something isn't really working. How can I improve it? And then maybe you can change something about it. But this is an absolutely essential key. And that's why this webinar isn't so focused on one particular system, although we'll show you one towards the end of it. This is more your foundational knowledge. Then, next point. securing profits quickly and taking risk off the table. This is very important factor, and this comes back to a question that was said earlier in the chat, namely this thing of I think somebody said that they are, when they open day trades, price might go into profit or something, but then there's a reaction and it hits the stop loss and one loses the money. And that is very common. So one factor can, for example, be if you trade, say, before the London session, for example, and you don't realize that you're now trading into the opening of a new session with an open trade. And then suddenly the dynamic of price movement changes dramatically, and you have no idea why. And it's because of the change in session. So you've got to have this calendar. I'll show you this website, the website name here. So up here, www.worldtimezone.com/markets24.php. So I'll just leave that here briefly for you to look at. Markets, worldtimezone.com/markets24.php. So this is one reason. The other reason is that for day trading, you can't bet on like huge profit margins. As in, you can't bet on huge reward to risk ratios. You need to have a good enough reward to risk ratio in the sense of if you have to put your if you have to put your target so close because there's some resistance in the way and your stop loss is quite far away, then we've talked about this before in many other webinars. It's not a good setup because you always want to have more potential to make profit than you risk. And so even so, when you have a setup that has a good reward to risk ratio, one thing I've learned from somebody else, and that was a critical factor, is for scalping, for day trading, as soon as price goes into profits and goes into the plus, and say it's moved in your direction, in your favor, and it's coming to the next resistance or support level. So let's try and find an example so that you understand what I'm talking about. Okay, so say on this 15-minute chart, you can see that there is a support and resistance area, a resistance area here, right? Because we've had several wicks stop here, then we had another wick here, and now we've got a hesitation here as well. So if you, for example, chose through your strategy or your system to enter a trade somewhere lower down here or here, and price has gone into your favor, and then you see that it's approaching this resistance area, this is the time where you put your stop loss straight away to break even, and you may decide, and I think that's actually a good thing for scalping and very short-term trading, is that you take, say, 50%, you close 50% of your position, you secure some profits, you have no more risk because your stop loss is a break even, and you just let then the trade run further to the next resistance zone, for example. This makes sense for short-term trading. For longer-term trading, it's a different story. There's a different dynamic and approach you've got to have, but this is certainly one thing I've learned for scalping, is that you've got to be quick in and out. You've got to take your risk off actually as quickly as possible. Of course, you can't be too fast, but as you see that price approaches a certain key resistance or support area, that's when you want to say, okay, taking some profits and putting to break even. And it might not mean that you made huge amounts of profit, but you will have a higher success rate that way. So you will win more often, even though the trade might not be at its full target potential, but keeping those scalping trades open and keeping yourself exposed by keeping the stop loss at your original position has, in my experience, not worked. And so this is an important factor that I would recommend anybody who wants to trade that way. I shall go back quickly to my chat. Bideme, yes, this little note will be sent to all participants. This we can organize that. That's no problem. Then the question: what's a good reward risk to reward ratio? Yeah, so you want, I think, ideally at least a 2 to 1, a 2 reward to 1 risk ratio. So you want the potential for twice as much profit as you risk as a minimum. Of course, the higher the better. But so for scalping, so 2 to 1, I mean, you want. There's often situations where you won't get an enormous reward to risk ratio. Okay, so I think that's it for the moment. So we've talked about securing profits quickly and taking risk off the table based on your system. Then another factor that can suddenly cause unexpected price reversals or so within a small time frame is, of course, news. So that's another factor that you've got to be aware of. You need to go to Forex Factory or investing.com or something like that, somebody who has a news calendar, and you've got to see which one the most important news are. They're usually highlighted either with, I don't know, a red dot or 3 bullheads or something like that. That the most important news are the ones, obviously, where price will react to them. And often during those news releases, there is some reaction and it's going up and down a bit more violently, and then price kind of continues actually in the same direction as it was before. Sometimes it has a very significant turn a point of the market as well. But when there is a important news release, then I would not trade short-term scalping at all. So I would leave these times out. If you see a good setup, but you're seeing, but in whatever, half an hour or 1 hour there's a news release, then really you want to close that trade about I think maximum 15 minutes before the news. You've got to be out of that trade. And of course you can't just say, okay, I'm gonna open my trade half an hour before and then only have 15 minutes for my trade, which might not be enough time for your trade. In that case, you've got to have the discipline to skip the setup. And that's when we come back to the important point of not every day is a good trading day for day traders. So day traders, you will get maybe some days where you will enter 3-4 positions and everything goes well, and then, but you can't expect that every day. You will, if it doesn't fit into your setup, skip the day, take your day off, do something else, and look again. All of that, what I've mentioned, makes you then eventually into an anticipatory trader, not a reactionary trader. That's where this pre-analysis idea comes back in, right? Because you have to, like I said, know what you're going to do, or what's of interest to you in advance. If you say, for example, if you look shortly before the London session or during the London session and you say, price is now going down strongly, I better jump on board. Well, that's reactionary trading, because usually you are then already a bit too late. Price is not anymore ideal for an entry, and you're chasing the market, and that's reactionary. You need to essentially already anticipate where you think price is likely to continue in the direction that you want. So some setups are reversal setups, as in prices going up, but you based on your analysis, you get a really strong feeling. Okay, this is a point where it should turn again. Um, then that's the area to for example sell. Um, or if it's with the trend, then you're waiting obviously for pullbacks. So in this time area beforehand here, while this currency was trending downwards, um, you could have felt that okay, price is coming back, say, to moving averages and so on. So I'm going to enter because there's still room for it to go further down, etc. I'm just talking general things, but just to give you a sense of, you need to have an anticipation of what's going to happen next, not what should happen and then jump on board, because then you're usually too late. Okay, so some more questions here. If I just start in trading, where do you suggest me to start and what to trade? Okay, that question from Venzu01. I would suggest you educate yourself based on different ways. You can't jump in and think you can trade straight away well without really understanding a lot of elements that are involved for trading. It's just a matter of fact. It's like any other kind of education in a way. You've got to take it step by step. So trading strategy guides, for example, I do webinars on different subject matters. If you attend them regularly, you will start to experience and hear about different elements of the market, of trading, and you will start to be able to bring components together. And that's why it takes time to develop. But I would say you need to just develop individual parts and eventually bring them together, or you find a system that you like and you just try it out. So for example, this Strike Elite system that I'm going to show you now very shortly, if you think, okay, in principle I like it, open a demo account and use the system, follow the system on your demo account and see if you just like it. And if, because that can happen sometimes, people find a system, it works for them, and you just have to be consistent. So these are two approaches, but I would always start out first with a demo account, develop your skills, bring your elements together, or test out an existing system on a demo account and take it from there. Cool. Now, next question. Okay, how do you purchase indicators? I will leave that up to my colleague, but in principle, I think he might be able to answer that question for you. Okay, next question. Assets differently from what I noticed. Is there a different list of things known for distinctions between asset movements? For example, Euro USD move different to Pound USD. What would be different generally? So in terms of moves differently, it depends on the volatility. So there's two elements, and I'm going to keep that short because it's kind of slightly off topic. Basically, one thing is volatility, and that's how strongly and fast price basically covers across different price levels. So here we've got quite a lot of volatility. That's good. Then you got also liquidity, as in how many people are buying and selling at a certain point. And we need that on the one hand, it's good. But if the markets are too liquid, as in there is on every possible level, on every possible price level, there are buyers and sellers who are willing to buy and sell at the same price, then price isn't going anywhere. So if you just have liquidity and that lacks volatility, then you get a ranging phase. So for example, look at the euro. Look at the euro dollar. Here, during that phase, for example, during this phase, I bet you during these many weeks, price was in such a narrow range because there were just buyers and sellers both all the time and all these levels. So we had probably high liquidity but very little volatility. Then volatility picked up eventually again when this happened. So I hope this answers your question. I'm not quite sure if what did you ask? Yeah, okay. So in that sense, when I say one pair is more volatile than others, so if, for example, the pound pairs, actually I don't know exactly for what reason, but I just know for the fact that the pound pairs do cover a lot of ground generally, so hence they move fast, so to speak. They cover more pips in a shorter period of time than other ones, or pound yen. So that's, I hope that answers your question. My accent, Trius, is German. You got that half right. Okay, then Jim Ferguson. In other words, all they can do is give you the tools. There's no magic potion. You have to apply yourself. That is true in some respects, but we also, like I said, we're going to now show you the system that Trading Strategy Guides provides, including like a trading community forum, etc. Try it out, because sometimes a system that somebody else created can work for somebody else too. If you're not confident straight away, there's absolutely no harm done to start off with a demo account. But in principle, yes, if you want to become absolutely, if you want to do your own tailor-made trading approach, there's nothing like that. There's nothing that beats you bringing it all together yourself eventually. And this takes time. It takes about, I think you need to put about 2 years of time to really become your own, so to speak, your own trading system, you know, adept. But it's definitely possible. So I think that's it. When day trading, which time frame should you look at to confirm your trades? Okay, so King E, to go back to what I said just earlier, I would start out first at mapping out my my support and resistance areas, right? By drawing trend lines, by drawing horizontal support and resistance lines. If you like moving average, put those in as well. And if price is anywhere near that zone on the higher time frame, 4-hour chart, I think 4-hour chart is a great overview. This is like a sort of, it's a sweet spot. You can really get a good overview. And then, but if you notice, okay, there is time for, there's space for the price to go in one direction, then you say, okay, I like this in principle. Now I'm going to the smaller time frame, and I'm looking for a good entry, waiting for a pullback, say on the higher time frame, and then enter. So start out with a 4-hour chart for your pre-analysis, and then enter on the smaller time frames. And in a way, the Strike Elite system will work in a similar way. I think your entries are mostly on 5-minute charts or 15-minute charts, and then what I add to that is some of this pre-analysis on a higher time frame. So you will get a sense of that if you check that out. Okay, then finally, just a quick note on money management. So in order to be a successful day trader, actually, in order to be a successful trader across the board, you have to, the money that you trade with, you need to be capable of losing in principle. You need to be able to say, I can live without that money. If I lose it all, it's not a problem. Of course, you don't want to lose your entire account, because that means you've done definitely something wrong, because that should not be necessary. If you risk only ever about 2 to 3% of your account per trade, this should not be an issue. But in order to be psychologically free, And that's where it comes back to those other questions of how do you make small gains but then bigger losses and so on. That problem comes up a lot when you are not free with the risk that you're taking, when you're not free with the money that you're risking. So if you say whatever, you've got $10,000 worth of money reserves in your account, and you say you put half of that, 50% of all your savings that you've got in your life or something like that, into a trading account, and you say, okay, now I'm going to trade with that, and I'm going to risk 5% of those 50% per trade. Well, if you take it all together, that actually then means that every trade you're risking a reasonable amount. That's an amount of money that you might feel you rather hold on to, and so that creates psychological pressure for you, and that then makes it harder for you to let your trades develop, to trust in your analysis, to stick to your system and not break the rules in order to avoid losses or something like that. And so the best thing, and unfortunately, of course, not everybody is in that position, that you kind of only use maybe whatever 20% of your overall capital and put that in a trading account, and then of those 20% you risk 1% or something like that, and then you maybe it depends on who you are. Some people can cope with more of that, some people less, but you got to find a level of risk that where you say, okay, I'm risking whatever $50 on this trade, and I'm absolutely okay if I lose it. And you've got to do that. You've got to be at that point with every trade you take in order to create that consistency in your management. So this was the last point for today. I'm going to now show you a video for this Elite Strike system, and I will check questions one more time here. Okay, here we are. So I skipped your question, Yafi. Okay, I haven't seen your question. Let me see. Is it advisable to use the 40 moving average? Okay. Like I said, you could say pretty much anything between 1 and 60 is what I call a short-term moving average. It's one for where price, if you're waiting just for small pullbacks, that's the moving average for that. So I like to use one of those. So between 0 and 50 or something like that. The one I use is 21 for various reasons. And then I use a bigger one. So from 100 upwards, you can say it's more longer term moving average. And I use also one of those. So I think the most commonly used ones are 50, 100, and 200. I use 21 and 144. Okay. What MACD setting do you use? Only one or couple? I actually don't use MACD myself. I use the Awesome Oscillator. So what you're seeing down here is the Awesome Oscillator. And the good thing about that is actually it doesn't even allow you to change the settings. It just is what it is, and it's great. The one above here, this is a proprietary indicator I get that from somewhere else. It's roughly the same as this. It gives me a bit more sensitivity so that I can see a little bit more what's going on within, say, a swing. But the Awesome Oscillator is actually the basic that I use. Okay, quick tips on gap up and gap down strategies, please. Okay, gap up and gap down strategies. I'm not a gap trader. Yeah, gaps most often get filled, but there are so many other better ways of trading than waiting for gaps, which are not very common, that I just don't bother with it. I'm sorry. What's the best ADX setting? Sorry, can't answer that question. That goes too far out of this webinar. What leverage you use in your trades? Yeah, well, again, I guess this whole thing about leverage is changing depending where you are. In Europe now, if you're not a professional trader where you can kind of show that you've got enough funds and have some sort of financial education, then your leverage is quite reduced. In the end, it doesn't really matter what leverage you use, as long as you just simply don't risk more than 2% or, well, a maximum of 5%, between 1 and 5%. 5 is already quite high, so something in the middle, like 2.5% per trade of your account balance. That's how you do it. Then in that case, the leverage, forget it. And I would not have, I think, more than uh, 4 of those trades separate, so they can't be correlated. Like you can't, for example, go, oh, I'm going to trade something that's strongly correlated. I haven't got something in my mind right now, but say two currency pairs, they can be quite moving very similarly. So you don't want to open two trades with 2.5% of two currencies that that move almost exactly the same, because then you're doubling your risk essentially. Okay, Fibonacci, unfortunately, I can't talk about. This is beyond the webinar, but we do have good Fibonacci education. If you go to a website, you can find that there. What leverage do I personally use? I think something like 50 to 1 or so. But I, I never come to my limit anyway, because I mean, I'm trading more longer term also, so I don't have that many positions open. In that case, my margin is never near used. Like I've got usually like whatever 98% of my margin is still free. That's just the way I do it. So smaller time frame, like 2 minutes. Don't know what you mean by that. Okay, and then finally again here, I'm a new trader for 6 months and of course losing by 20%, but in the last 2 days up 5. But listening to great months and putting all the pieces of the puzzle together. Yeah, well, that's good. I mean, uh, you know, if you're worried, if you feel like you're losing money too fast, then reduce your risk. Like slow your risk right down, half the amount that you're risking per trade, or something like that. Bring it down to 0.5% of your account balance or something, and then it gives you more time to put the pieces of the puzzle together, right? I really recommend that. Okay, then next question. Is it true that during big market moving news, banks at times make entries that move assets in certain and maybe opposite corrections temporarily before the main direction of news happens? Yes, I Kayon, this is true. Um, as far as I know. Um, what happens there, and it's a bit of a sad thing, but I think it's very important for retail traders to know that. Um, Say if a bank has $20 billion or something, they want to invest in something. Just simply, for example, euro dollar. So they want to buy euros at a certain price. Now, if they were to just buy 20 billion um, euros worth, the price would just go up so much that they themselves would then not get the price level they actually wanted, because the price has already moved. And so they are essentially, in a way, they're waiting for retail traders to think the opposite way, so that there's enough. So if they want to buy, they obviously need enough sellers at a certain level. So just out of example, um, euro dollar is at 110, and they want ideally to place all of their billions at around 110, not at 111. So they're gonna try and hoping for sellers to come at the 110 mark, so that they can place more and more buy orders, at around the same level. Um, and what happens then is often they might sell some to make to make many traders think that there's a sell opportunity that's happening, and then you get a sudden movement back, and often that happens after news. So I think often the market is already highly positioned, as many people already know, and the big investment banks and so on, they know already in what direction they want to go and want to trade, and then often they're simply waiting for the news that there's enough small traders who go wild and buy and sell and what have you not, and then uh, they just start placing their orders at that time when there's high liquidity, high volumes. They know they've got enough money that they can push the market in one direction, and then suddenly they're laughing, and a lot of retail traders are crying. I hope that sort of more or less explained that. Sorry, I can't look at the Dow. I am not quite, in general, I don't think that the indices are quite ready to be shorted yet. I think they will probably go up a little bit higher, not much longer, but it could still take a few weeks. That's my personal view. Um, do you use a service to project the probability of a trade being successful? No, I don't do that myself. Okay, I think that's it. The time frame question I've covered already enough. Okay, so thank you for listening, everybody. I'm going to switch you over now to this video on the Strike Trade Elite system. And so, yeah, listen in, and all the details will be there. I hope you enjoyed it, and I wish you all really good trading. Tune back in, because I'm sure we'll talk more about subjects that are relevant for everybody in the future. Bye for now.
Six. This is the use, what the push, time charts, and different markets. And so here's a little blurb about. Alright, how's it going, everybody? So this, I'm going to show you guys it's called our Strike Trader Elite trading system. I'm going to show you guys a little demo of it, kind of what we have going on as far as how many platforms it's developed on, and a couple other bonus extra features. So let's go ahead and get into the actual system. So the trading platforms that it is available for is MetaTrader 4, MetaTrader 5, NinjaTrader 7, and NinjaTrader 8, and then also TradingView. So these are the current platforms that the Strike Trader Elite system is going to run on. So you're not going to be able to use the system if you don't have any of these platforms. And so what markets can you trade it with? You can trade it with Forex, stocks, options, cryptocurrency, and also futures. And so the win rate, this kind of give you a general overview of the win rate as far as with our strategy, what we've been testing, and these change over time. But this is just what we have tested it. This is at a 2 to 1 reward to risk ratio. So the 15-minute time chart, we were able to pull in roughly a 70.4% win rate with it. The 30-minute chart, we were also be able to do around 70, and then also the 4-hour chart. So you can see here that it's going to be able to be used on different time charts and different markets. And so here's a little blurb about the different things that you're going to be able to receive, and I'll hit on some of these later on as well. But you're basically going to get unlimited access, lifetime access, once you go through the subscription. Once you keep your subscription, and you're going to be able to get MetaTrader 4, MetaTrader 5, NinjaTrader 8 or 7, 8, and then trading platform, like I said before. Those are all going to be included. There's no extra hidden costs or anything like that. That's included inside your membership. You're going to get a lifetime support with us. You're going to be able to hit us up at any time. We'll jump on a call with you. We'll chat with you. We'll do whatever you need to answer some of your questions. You're going to get special access to a members area, which I'll show you here in a little bit. You're going to get unlimited access to our report vault. We got hundreds of reports, so we threw those inside a nice little vault, so you're going to be able to get that. We have a chat group a specific chat group, and here I'll show you that as well. And you're, like I said, live chat. We have some trading alerts. The indicator shoots out a ton of trading alerts, so you get that as well. We have a nice Strike Trader Elite rewards program, so if you stay with us a certain amount of time, you're going to be getting rewarded with some things. And I believe if you're with us for a year, you'll be getting a nice little Amazon gift card from us, from our team. So it's a nice little reward program we have set up with the Strike Trader Elite. You also get badges. There's members only badges if you're doing some, if you're sharing some the charts with the community, if you're giving us some feedback, if you're doing a lot of stuff. We got some badges for you. We also got a live trading room inside our group. One of our members hosts a live trading room five days a week. Um, so that is also included. Then we got a couple bonuses with mobile access. You're going to be able to use the indicator on your phone, and then there's also members only training. And so without further ado, let's go ahead and let's just take a look at what it looks like on some of these platforms. So I got all the platforms brought up for you guys, and so let's start off. Actually, let's go ahead and start off with the chat group. So here's a little example of what our chat group is. And so we have the ranking, promotion, introduction. So here's our signals, and we have some members of our team, some of the community. They're all sharing their charts. They're all sharing ideas. They're talking. They're communicating, and about the system. So if there's any questions, some of our members ask them in here, and other members answer, or some of our staff will answer it. But there are always going to be somebody to answer any of your questions about the Strike Trader Elite system, and you can see some of our members actually even get promoted as well. So that's really cool and fun for the community. We also have a place to ask for updates and requests, and then we also have a place where we share our trading view observations, and we also have some price action training. This is training is with our actual price action group. So this is actually a price action group. Tim likes to talk about price action because that's what he trades. So we actually just threw this in here as just a free bonus if anybody wants to just learn how to trade and kind of learn different price action techniques. Tim will be glad to help you out there, and he's very, very knowledgeable in the markets, and so that is something that we threw in here as well. There's a few other things like something with support, and then we got voice chat. We can actually traders can actually talk with each other live. So that's really nice. That's really fun. And that's our private members only group. Now everybody in this group is a member of the community. There's nobody else that is. This is just a private only. Like you're not going to be able to get access to this today unless you subscribe to Strike Trader Elite. And so let's go and take a look at the members area. So here's the nice members area. We tell you to obviously get access to the group right whenever you sign up, and we kind of show you exactly what to do as far as installing it on each of these platforms. We tell you how to set your charts up. We tell you how the basics, the system use, how you use the push along with it, the trading view tutorial. So you kind of get the understanding of that. We're in here and we're showing you exactly how to use this system and exactly how to trade with this system. So all this is included in membership. There's no extra fees. There's no extra upsells or anything like that. All of this, everything you've just seen so far is included in the membership. So now let's go ahead and take a look at some of the platforms. So here we go. This is the trading view version of the indicator, and let's go ahead and put that on there. Looks like we got it on there. Okay, so we had it on there twice. Got rid of that. And so here's the signals. So it's going to shoot out exactly. You can actually set an alert when this happens. And here's actually where it you would have went long. You would have bought. And this is actually Apple, as you can see here. This is Apple, and you can see that was a nice little entry. It was a nice little take profit there. Same thing here. Told you to go short here, and this is where you would have taken profit. So there's nice two trades. This is just Apple here, and it looks like here's another winning signal as well. And so that's the last three signals. So that's just Apple, and there's also a nice strategy tester. And sometimes you'll see that this is taking every single signal, and a lot of most traders are not going to take exactly every single signal, but you're going to be able to see either a graph going way up or going straight down. You're going to see the percentage. But again, if once you learn a strike trader elite system, you know what to look for, and so you're not going to exactly take every single trade. There's some price action, a little bit of price action techniques involved in getting in trades, and so. But this is actually really nice because you'll be able to test any time frame, any pair, and you'll be able to see kind of the results that you may get with that. So this is the TradingView version. This is also available on mobile, and there's really no way I can. I guess I might be able to show you it, but really, how it'll look on mobile is kind of what it would look like. Something like this. Just picture this as your phone, and so this is basically exactly what it looks like on mobile. And we actually have some videos of a live demonstration of it on mobile. So if you wanted to see that, you can go ahead and look at that as well. This is kind of exactly what it would look like. So it's going to work exactly the same. It's just going to be on your mobile phone. The reason for that is because TradingView is web-based, so you'll be able to use them on literally any device that you have. So that is really nice, and we're really happy to get it on TradingView because you'll be able to trade all these different markets. So let's go ahead and jump off of TradingView, and let's look at it on MetaTrader 4. This is actually where it was originally developed for. And so this is MetaTrader 4 platform. If you've never seen it before, you can go in and just look up some videos of MetaTrader 4. It's a really nice platform. It's been around for many years, so this is why we definitely wanted to get it on this platform. And so you can see here that it gives you everything you need. It gives you the entry, it gives you the stop loss, where you're going to place your stop loss. Now, do remember that this is not an automated trading system. This is a system, but this is just an indicator, and then you have the one that decide to make the trade or not trade it. So you're going to have to come up here, and seeing this is the demo account, I did see this signal right before I did this. We can actually go ahead, and this is kind of exactly what you would do. You hit the buy, and then you drag your stop loss, and then you go for your take profit, and that's literally all you do. You'll get what I did. How I saw this right before I actually was going to make this video for you guys, where I do this demo for you guys, is I saw this alert come up. So I'm like, okay, this is perfect. I actually wanted to show this exactly how you can trade with this system. And this is far from a regular. It does use a little bit of MACD, but it uses a couple other things. This is all custom. This is all our strategy. And so if you see this and you say, well, this is just the MACD, I can trade this. Well, no, you can. It's not exactly that, because we have some delayed entry methods, and we have some specific things we look for to signal these. So if you're just trading this cross, you're going to get taken out a lot. So we actually have some stuff, and you'll be able to learn a little bit about that inside the members area, inside some of our videos. So yeah, here it is, and you'll be able to adjust any of these settings. If you wanted to come up here into the settings. And so here's all of the settings, and you're going to learn exactly how to do all of this. But I just wanted to show you what you'll be able to adjust. So you're going to be able to adjust. There's many alerts. There's alerts on the zero cross, and it alerts you to stop loss, stop order, trigger, take profit, stop loss, all that good stuff. So everything that you see here, it's going to shoot out an alert for you. And I'm going to show you, I think I had one more here. So this is what it looks like when you actually get a triggered trade, and then it hits that it hits that take profit. So you see here, if this would come up and hit this take profit, this is going to look exactly like this. This is actually, you would not get in the trade here until it hits this, until these dots start to turn teal, that teal color there. And this is actually where you get the alert to buy. So if you would have bought here, this would have been a great trade. Now, we're not done yet, technically. Now, the strategy says you can get out here, or you can continue to build on that trade. So what we do is we move your stop loss from here to up here. So now you're in profit. So now if anything happens, and say you would have moved your stop loss here, boom, you would have got stopped out. So you would have got a nice, would have got maybe 15 pips there. So that would have been still a nice trade. But um, if you didn't use this moving stop loss, you'd still be up here, so be up good. But if you're using our trailing stop method, you would have got taken out here. Or you can also, there's two options. You can actually take an additional trade and then also put your stop loss here. So if that would have been the case, then you would have gotten taken out here. So you'd probably be broken even at this point. But either way, there's some different methods that you can do based on the strategy. It all works exactly the same way. It's once you start seeing this come down, then you're going to want to start to think about getting out of this trade. So this is the MetaTrader 4, and MetaTrader 5 looks exactly the same as well. And then lastly, we got NinjaTrader, and you see NinjaTrader here, exactly the same signals, exactly the same strategy. Just looks a little bit different here. So really, they're all relatively the same. Some of the TradingView versions a little bit different based on how we had to have it set up. It uses a calculation of ATR indicator, the average true range, and it shoots out the stop loss and take profit. So you'll be able to use it easily on any time frame and any pair. But you can see here, this would have been an entry. We have a trailing stop, and then you would have take profit here, or if you kept it in, you would have got stopped out here. So they all work the same way. They all kind of look exactly the same. But yeah, so it is available on all those different platforms. So that's the basics of all of the features that you get with Strike. And if you have any more questions, you're going to be actually coming over to this link. It's info.tradingstrategyguys.com/StrikeTraderElite. And you'll be able to see a lot more about our system. We added in some other stuff in here that I really didn't get to today, but I covered most of this. So yeah, any other questions, feel free to just go. So we'll throw this link in the description in the chat. And please use, I'm not sure what our discount code is at this time because it might change over time, but we got a discount code for you. Use that coupon code. We'll give you some percentage off. If there isn't, hit us up. We'll give you one. We're more than happy to do that for you guys. So again, if you have any questions at all about this trading system, and you're looking for a trading system and you're wanting a winning system, come on over and give us a shot. There's really no risk. We have a 100% refund. If you are not satisfied within the first 30 days, we will give you a refund. So there's really no risk. There's people that it happens, and they get it and they say, well, it's actually not for me. That's fine. We give you a refund. But other than that, if you guys got any questions, hit us up at info@tradingstrategyguys.com, or you can come to our website. We have a chat bubble. Just come chat with us on Facebook. We'll be more than happy to answer some of your other questions. So thank you for sticking around. Thank you for watching this video. Go ahead and get yourself over here to Strike Trader Elite. Go check out, read some more about it if you want to. If it seems right for you, go ahead and make that decision, and we will see you inside the group. I'm actually the admin of this group, so I'll be more than happy to communicate with you. I'm always talking with people. I'll get on the a live voice chat with you and kind of show you some other stuff if you need it, other help. We're always here to help our members. So, all right, guys, appreciate appreciate sticking around, and we'll see you inside the members area. Thank you.